The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour for this 9th of December, just about to wrap up the year. Isn't it amazing how time flies? All right, 28,174 was the all-time high on the 27th of November. Dow slides real quickly to the 27,325 level. This is going to be an interesting aspect. Actually, I'm going to take this oval away. I think it's just confusing things a little bit. It's better to see the pattern as I'm looking at it here. I think there's a rollover unfolding. Even with that spectacular move, I say spectacular move because of the jobless rate. That was really quite something. The response was very good, up 300, but I looked at it over the weekend. In fact, it's very frustrating. I did spend a lot of time this weekend going through charts, but really trying to go through my bigger long-term charts. I wrote up for my subscribers to my opening call just a ton of stuff. And for some reason, I think it's another mouse, a little mouse that I got, and it seems to be doing some strange things. I must have, when I saved instead of a JPEG, I saved as in a different format. So when I posted all the charts on Sunday afternoon, I could have sent them out earlier, and I said, no, let me do this patiently. Nobody's in a rush. Got plenty of time over the weekend, plenty of time on Sunday afternoon and evening to look at the charts. Let me send them out early Sunday afternoon, which I did only this morning to check and see, because usually it says charts posted, done deal, finished. I don't have to do anything about it after that. I hardly ever go over it again because I've got them all in my folder. And I see that there were only 2 charts out of all the charts that I posted, and they were really important charts. So I managed to do some things over again and repost it. Not everything went off. I'll try to, over the rest of the week, I'll try to catch up on some of it. But the really important ones did go out. That was the Dow, that monthly, using different techniques and different ChapmanWave methodologies. But most important is that I didn't do this because I've done it on the show, but let me show you something. When I go to the Dow, based on my ChapmanWave automated support and resistance levels, it's green on the way up and cyan on the way down. Look at here, 28,282 in the 120-minute chart resistance. The 28,032 was the 10-minute, and the high was 28,035, I think it was. And look at the weekly. So first of all, the daily is 28,271, 28,470s, and look at the weekly from 28,053. You've just got 1, 2, 3, 4 different levels from 28,300 to 28,500 as really strong resistance, which means that you could get there. But it also says the way this is weighted, WEIGHTED, is appearing to me to be saying that we're getting really close to a deeper pullback. I'm not going to call it a correction because a correction says double-digit pullback is more than likely, but a digestive phase says, hey, 4 to 8%, it's not impossible, and it doesn't have to happen right away, but we're coming into that level. I'll talk a lot more about it tomorrow night when I'm the guest speaker of the Boston Investors Group and Investors Business Daily end of year meetup. Let me see if I can just find this information here. I think that's it. Yeah, here it is. So details, Boston Investors Group and Boston IBD potluck holiday party and talk Tuesday, December the 10th, 2019, 6:30, potluck reception and networking until 7:30, and then Seeking Investment Opportunities for 2020 by Basil Chapman, MIT Building ES E51 room, that's the room, Memorial Drive, I believe it's 70 Memorial Drive, Cambridge, Mass. You can just Google this. I've even got the directions right here with a map. So it says please RSVP. So if you get a chance, please just go to the page, the Boston Investors Group page, and just send a return to say, yep, you're coming. And there's map and parking info. Parking shouldn't be very difficult this time of the year. It says, please bring food, main dishes, sandwiches, veggies, munchies, desserts, drinks, cups, plates, or ice. You may bring wine or champagne if you'd like. We will use the first hour of the meeting to celebrate the holidays. We'll eat in the lounge area outside room 372. Use the time to network, pick the brains of your fellow traders, and introduce yourself to some of the members you haven't yet met. Please fill out the name tag and wear it. For the serious part of the meeting, we will have a talk by Basil Chapman. No, the serious part is the eating. The fun part should be the talk. I'll be passing the hat, asking for contributions at the meeting to cover. This is, I think this is, yeah. So these are the hosts. We'll be passing a hat around. Obviously, if this is the first time, the only time you've been, they're not expecting much. But it is just, I know these people put a lot. Pat and Jeff put an incredible amount in to make this work. It's been very successful. It's gone for a long time, many years, and a lot of information is imparted. So, yeah, I think this should be very nice. Tomorrow, Cambridge, Mass, across the river at MIT. It's a labyrinth out there, but this is really easy to get to. And the parking these days has not been bad at all. Okay, let's get rid of that. Now, so this goes right through all the different indices. There's a lot of upside resistance from about the level we hit Friday and earlier in the week, and a little higher. So that means you can go higher, but we're starting to get into the resistance area. The kind of resistance that says to me, be careful, because it could be time. It could be time and price. We'll only know on the first really big decline where the Dow goes underneath 27,600 and the S&P breaks the low of Tuesday, as does the QQQ and probably the IWM. All right, let's get back to the nitty-gritties. Oh, that's tomorrow night, 6:30, December the 10th. Dow down 71. Look, the MACD on the left side is weak. The stochastic did rally, but it's only at 50%. It's weak. On balance, volume is good. And it went to an all-time high on Friday. The weekly chart is suggesting that the MACD is strong and the stochastic at 94% is strong, and that'll have to be the daily price that really drags the weekly down. The monthly chart of the Dow is very strong, but it's in leg D. In the ChapmanWave methodology, let me show you this right here. If I can just get to there, 1, 2, 3, click. Yep, there it is. So in the ChapmanWave methodology, we're always looking to see, oh, there's the break, huh? All right, I'll do this straight after the break. That fourth highest peak, peak D, is where other things can happen. Oh, I actually lost it. Oh, I'm having a little chart paranoia here. I'll be right back. Basil Chapman, Tiger Ignitions Hour, Dow's down 71.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, Basil Chapman. So here it is. From an identifiable low bar in the ChapmanWave, we merely count each successively higher peak. We alphabetize them, uppercase on the way up, going all the way from an A to a G, put us at that fourth highest peak, peak D, that other things can happen. I'm only looking for 3 patterns, straight down, straight up, arch or cup, and then you can get a mix where you get a lowercase h called the dreaded H, or a Y, inverted Y, which is positive. So with that said, let me just do this because it's going to save me a little time because I did lose that. So here we go. Do it to there. Great. Okay. Get rid of this out of here. Thank you very much for your support. And here we are. So we're looking at the arch formation. That's what I'm thinking is going to happen here. And within the cup, look at all these cup formations going to higher highs, higher lows. That's really positive. A little bit of a V-shaped pattern in the monthly chart. But the Dow is in leg D. In December, all of December, if you don't take out 28,174, you've made a peak D. That's where you've got to be somewhat careful. But wait a minute. If you go to the S&P, look at this. The S&P is only in leg B. Look at this. Monthly chart, leg B. All it needs is to go. We missed it by about 5 points. 3154.27. continues leg B into December. It should be able to do that. If it can't do that, we're going to have this arch failure right here, dreaded H, that lowercase h, and it starts to turn down, and you'll see that happen if by Thursday or Friday, the S&P is underneath 31, the black line, which is the 14-period moving average, needs to close under that. Yeah, 31.18, below 31.18, there's a real problem, and you've got that H pattern, and you're going to make a peak C on the weekly. We'll see what happens all of December. Look at the QQQ. 206.05. All it needs is 206.06, and it extends leg C in the monthly chart. And in fact, it makes a leg D in the weekly chart. And the S&P, no, the S&P doesn't do that because it made a new high. Yes, S&P will make a leg D in the weekly chart if it goes above 3154.27. Look at that's why I'm saying tomorrow's talk is going to be so interesting, because we have such clear parameters. A move in the Dow into the 28,330, 350 area or higher says, you know what? you're probably going to keep running all the way through December, even if there's a little bit of a pullback. Excuse me, sneeze. This is my TFNN midday sneeze. And the most important part about this is that in the IWM, the MACD and stochastic in the weekly chart for the first time with new recovery highs is suggesting that there is a chance that we could see the Russell 2000, thank you, the Russell 2000 entertain a better chart formation than the S&P, the Dow, and the Qs if there is a traditional end of the year, beginning of the year rally into the 2000, the low cap stocks. Now that doesn't happen every time, and one of the issues is that within the context of end of the year, there's a kind of a rotation that goes on, and sometimes that rotation is just very brief, and then you just go back to the norm. And other times you do get quite a deep correction, and at that point you'll test to see. Now I'll make it real simple. Here's this rectangle formation. Under the worst circumstances, if the IWM over the next 3 weeks going to the end of the year doesn't break underneath 156.50, but holds in the 158s on any decline, there's a chance that it does hold better than the others. But I think there's a tiredness here. And one of the reasons why we were negative going into last week is because there is a chance that all the good news is out and we have this flurry of bad news. It could be maybe the impeachment gets a little bit more serious rather than this kind of flippant he said, she said type thing, or he said, or that country said, and that country said. The nitty-gritties, we haven't got to nitty-gritties. If this was a real court case, the nitty-gritties would make a difference, and we haven't anything like that. So without picking sides, all I'm saying is be a little careful here, because there's a chance. See this chart here? You see the way in the weekly chart, the MACD is holding really strong, but what I really do like is this flat stochastic at 92%, and that's the IWM. And even today, it's only unchanged right now at 162.83. And I've been warning that the Dow, there's a certain vulnerability here, and you're down 78. The S&P is only down 3.5, so there's a discrepancy there. But I have to tell you that I'm looking at this saying, be careful. There's a tiredness that I'm looking at. There are these sporadic upbursts. Like, look at this, Microsoft. Microsoft has been an unbelievable leader all year, and in fact for a couple of years now. And all of a sudden, it's just stalling here. Yes, it's up 9 cents right now, 151.84. All-time high was on 152.50 on the 27th, 152.50 on the 27th. So it's got a V-shaped pattern. But look what the technicals are. If the technicals are, if they aren't saying, hey, now we're at a low, if we start to go back to the highs, this thing's going to really skyrocket. But instead it says, ooh, if we deflect lower from here, and it's already in a peak D in the weekly chart, and it's in a leg C in the monthly chart, with very good technicals, it could have a short, I wouldn't say intermediate term, but a short to a little longer than short term consolidation. Even if it only goes back to the low that was made in the 150.46s 4 or 5 days ago. It could take some time, so we're watching this closely. All right, now I just wanted to go back and talk about gold. Gold is now down 0.2 at 1464 in the continuous contract. There's an H pattern. Remember the lowercase h, that red pattern? Look how many times since peak E at 1566.2. Let me just see if this means, yeah, now it's smoothed out. It's 1573.3. It's a continuous contract. So you've got to expect that the price and the chart pattern and the timing are all going to be exactly right. But the price will change because it gets smoothed out. So here you are with weakness, lower lows and lower highs in the monthly chart. In the weekly chart, the monthly chart is at a peak C. It looks to me like 1447, the 9-period exponential moving average could be tested. Look at silver. Silver at this particular point is trading up 0.6064 at 16.66. It's broken the left side low seriously on Friday. It has only today, maybe tomorrow, let's say, to get back into that low of 16.75 that was made on the 12th of November. If we can get above that, that'll be good, but this is really not good. It's in leg D to the downside. Monthly chart doesn't look too great. And if you're looking at the dollar right now is down 0.09 at 97.61. It's holding okay, but it doesn't look great. I think the continuation of the sideways trading band in the dollar is going to continue a little longer until at some point in the next 8 weeks, it starts to trade back over 98.80. You don't want to see it under 96.80. That's going to be bad. I'll be right back. Basil Chapman, down 77. We'll be right back at 877-927-6648.
Since 1984, Basil Chapman has been using the ChapmanWave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the ChapmanWave sequence. Using the ChapmanWave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So I was asked, why did I think that there'd be some kind of a pullback today where there was such good news on Friday and the market closed very well? A couple of things. Number one is very often when you get a big move like that, there, especially if there's a little bit of a pullback, and then the last hour there's further strength, on the following session, you get some kind of a pullback. You get some kind of give back of the last half hour or hour's worth of trading. That would be normal. So if that became the normal thing, then I'd say, aha, now that internal strength that was seen Friday came off a negative, and let me just get there right now. Let's go to the Dow. It's the one that's easiest to do. Came off very negative technicals in the daily chart. But the one thing that was saying to me, just be careful, there could be some kind of a bounce, especially after that gap up on Wednesday and then followed through on Thursday. That said to me that the MACD, which was very negative, saw the on-balance volume really pick up strength. And that said to me, you can't ignore that. But at the same time, the high that was made in this blue line this on the left, the blue line, the on-balance volume, suggested to me that there was some kind of an oversold condition. The other thing is that the, let me just show you this on my charts that I show my subscribers every day. Here we go. Here's the 120-minute chart. Let me click, click, click. There we go. So this is what I sent out. And you got a peak D with a little tiny doji candle at an automated 28282 resistance in the 120-minute chart. But the MACD was very strong, not as strong as it was earlier when it went to the 27th all-time high. It was strong. The stochastic, you got to look at this, because if the stochastic turns down from 93 and goes under 80% in the next, I'd say, day and a half, this is a 120-minute chart, remember, that's not going to be good. The other thing is we made a ChapmanWave 5 with a doji candle at peak D at 28.035 on Friday. So that suggested to me that based on my other techniques that I've developed, and the one here is the ChapmanWave 5 methodology, there could be some kind of a pullback, a breakout to a move over 28.035, especially a close over 28.066, somewhere around there, would say, nah, it's going to extend even higher. Just be careful. But this is what I was looking at. So so those are the reasons. Okay, next thing, let's go to the TBT. This is really important. Why? Because the TBT is the inverse of the TLT. We spoke about it the other day and said it made a peak F, the ultra-short Lehman 20-year Treasury bond fund, and GT had reminded me that I should mention that it is 2 times long, but I was really talking chart formations. I just wanted to, I call it the mirror image. I needed the mirror image, some chart that gives me the mirror image of another one going in up direction and one that goes in the down direction, or vice versa. So this was very good for me. And because of this low that was made, where it goes from, I should have typed that in, right? 27.32 on the 7th, 27.32 on 11 the 7th, sorry, December the 7th. No, what am I talking about? It was 11.7. Came down pretty sharply the other day to 24.50. Let me just check if it was exactly 24.50 or a penny or so, but 24.47. So 24.47 right here was the low of 5 sessions ago. 24, I think I said 47. And this is trough D, I think it is. Trough A, trough B. We call them on the way down, we call the little V-shaped bottoms troughs. So lower lows and lower highs, and all of a sudden it has a big move up, and now it's got a gray leg A. Why is it called gray? Because it's way under the previous peak F. It needs a lot of technical strength to show the veracity of a move up, but it can happen. So I'm not ignoring it. I'm just saying I think that yields are stuck in a range. That's what the weekly chart says of the TBT. Look at the TLT on the upside. It just says same thing. Lowercase h came off the 148.90 high in the weekly chart way back, I think it was August, September, and then it plummets to 136, travels up to the 146 area, pulls back to the 134.45, and now it's kind of stuck in a range, but it's been making lower lows and lower highs, and that's going to say that the yields should have a slightly upward bias just at the moment, but at some point, if this market, which is now down, the Dow down 68, S&P is only down 3.5, if at some point we start to see selling pressure on the market, I think that money will come back into the so-called safety of bonds. Okay, that was my theory of this particular point that I want to articulate. Crude oil trading right now, it made a new recovery high. I'm going to give it the benefit of the doubt, calling it G/A. And that's the irony of this whole thing. G is very negative, saying you don't get higher than G because you have to reconfigure. So at this particular point, if it's a brand new A, that's really positive because you should make higher highs and higher lows. My thinking right now is that the crude oil is in a range, and that if we do see a spike in crude over 61.50, not too far from here, we're at 59.01, down 19 cents, that would trigger the kind of buying that says that the outer limits, and now I can make a bigger rectangle, the outer limits that we've had right at this point, we've got it typed in at 60 and at round about 50.44, I could change that, and I'd have to raise it, and I'd have to go to the outer bar of this high right here, right there, and raise the low, and I'd probably make the low the 54 area, and all of a sudden you're looking at the 63s. But I'm not going to do that just yet. I'll go back down again just to say we're still stuck in the range. Let's see how long this can last. All right, so that's crude oil. And the monthly chart says the same thing, just sideways for now. Oh, the VIX index. Question about the VIX index. I don't know what the question is. Let me just check it out. Different calls for the strikes. 20, 24, 35, 35. Is that 20? No, it must be 34 strike. Oh, interesting. Huh. Yeah, okay, I'll talk about that right now. But actually, before I do that, I see I got a question about bonds. You must have got a bad ice cube this week, and I'm going to MIT. All right, come and speak to me. I'd like to see you there, and we can just chat. Not a problem. I have no problem with you coming. It's my pleasure to have you there. The VIX index. So the VIX goes from a low of 11.42 on the 26th of November. 11.42, and it screams up to 17.99, single leg A. I'm going to keep it as an A for now, 17.99. And let me just double check because it could have changed with my not even noticing. Up 17.99. 4 days later, this is on the 3rd of December, and lo and behold, it plummets this morning. Is that correct? Could it have done that? Down to 12.25, and now it's at 14.87? Huh, let me just check this out. 120 minutes, yes. No, I'm going to check it out in the 10-minute chart. I'll be right back. Basil Chapman make 2 peak Ds in the 10-minute chart of the E-mini. It better hold 31.39, otherwise a real problem at 31.48. That's good.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you're a trader in the market looking for exposure to gold or gold mining equities, then now is a perfect time to sign up for Tom O'Brien's Gold Report. The summer is over, gold is trading back above $1,500, and the 10-year Treasury is hovering at around 1.5%. Tom O'Brien has been writing his weekly gold report for almost 18 years. There's no one that knows more about how the gold market trades and how gold mining equities react. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, Tom ChapmanWave.com publishes his weekly gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, the dollar, as well as more than 30 different mining equities. As of September 3rd, Gold Report subscribers have 5 active open positions with an average unrealized profit of almost 38% for each position. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up today by visiting TFNN.com. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. There's a sale going on. Go to the front page of TFNN besides checking on the meetup tomorrow night here in Cambridge, Massachusetts that I'm speaking at. You'll see there's a Tiger sale, a Tiger dollar sale. I mean, that's incredible. Just real bargains. This probably is the year where at the end of the year where you get the bargains. And yep, there it is at TFNN. Check it out, front page of TFNN. Question about X, which is United States Steel and AKS. So Greg says, would you look at X for me? I'm in a small position, 1195, and had 14 as a breakout of range. What would be a good point to add? And just for information, I also have AKS at 219. Thanks, Greg. So we've been liking AKS and US Steel. There's trades on and off, but had no position lately. It just looked a little confusing with China and all. But AKS got I don't know about a takeover offer, but there was talk of a takeover, and the thing's gone from the 240s just in the last 2 weeks all the way to 333, 335 high in leg C today. So hold that AKS. There's nothing to do because I think there is a takeover and it gives a really good cushion on any pullback. So the real question you have is US Steel, X is a symbol. What about it? It's trading at 14.13, up 20 cents. It's acted very well. And one of the things that I was looking at over the weekend is that it's got a cup formation. It's gone to leg C in the weekly chart. That's the middle chart. And on the right, first time that you've got a decent leg A in a year, probably 2 years. Yeah, it's almost 2 years that you got a decent leg A in the monthly chart. Still not a great looking chart because you're stuck in that yellow rectangle that I drew. But what I would be looking at is in US Steel to add to the position because you're in real nicely. I don't want you to add here if there's going to be a pullback to the 1250 area where that's the rectangle support, because to give up 2 points means that you've now got a cost average which is really not favorable. I want you to have patience. If it goes higher, it just goes higher. Wait a minute. You could have two mentalities. One is, look, I'm buying it at 14.14 because, yep, it could be a new peak F, but the pattern itself says that if the MACD actually crosses positive and it's really close, it's at 0.35. Yep, it's just crossing positive right now in the daily, and the stochastic at 65 can actually rally to 73%. You're going to get a real nice move, and if US Steel trading at 14.13 can actually get to 14.53 to 14.57, there's a really good chance that the 200-period moving average, the orange line at 15.21, will become a magnet. And you're in leg C in the weekly chart. A very quick A to B to C, but it is a leg C. So this the two mentalities. One is that you get in right now and you treat it only as if it's a trading position, and that it could pull back, but you've got it 14.20. I would only give this one. I don't want to give it more. Let's see, $1 is 5%. I don't want to actually give it $1 is. Yes, I don't want to give it more than 55 cents. 14.12 right now. Give it a 55-cent stop, somewhere around 13.65. I'd probably even want to go 13.78. Something fairly tight on a trading position, just for the moment. And if by Wednesday, today's Monday, if by Wednesday it hasn't even gone to the high of 13.78, that's the high that was made at peak D right here on US Steel on the 1st of November, but instead it's actually creeping towards 14.55, I'd feel comfortable with that position, and then I wouldn't actually add, but that's the only way I would add at this particular high right now. Now, if you don't do that, and there's a pullback by Thursday, and it comes down to the 13.40 to 13.30 area, hold tight. Don't do anything, because what I will then tell you to do is for a second position, I would then wait under 13, somewhere in the 12.88 area. That's where I would add another position, because that one I only need to have a 45-cent stop, because if it takes out 12.48, that's not a good sign at all. So that's the way I would do it. Just look, you're just being rational. You put in your numbers. You feel very comfortable, you know exactly what you can lose, and then you have a tough time, and a lovely tough time, if all of a sudden this starts to creep higher for whatever reason, political, whatever it is, whatever the reason, and it starts, I'm calling this an F/leg B possible, and then it means you could even go to a C and a D, and then all of a sudden you've got the 15, 21, 200-period moving average as a magnet. To me, that's a real nice, because you've got such a good cushion in here, but I don't want that cushion to be a 2-point loss. I just want the cushion to be, if it does pull back, that's where you can go. Hope that helps you. Dow's down 78. It's a big correction. Yeah, so I don't want to talk about it now. Maybe I'm going to give 2 days just to think this through. We are short a position in one of the sectors still. I would have liked to have held my short position on the Dow, because we got in so perfectly. It's just 70 points off the top. Now it's going to be a lot harder. I just didn't want any risk at all. We managed to make some money. It was a great deal more money on Tuesday's decline, 650 or so points from our entry point. But hey, that's the way it is. We haven't taken it out. I'm still thinking we're in a digestive phase right now, fairly limited upside, and all the good news is kind of out. Now you got to be a little bit careful. That's my thinking. Okay, and we've still got long positions, and we're trying to deal with the long positions in a way that says, start lessening the risk, start raising some cash, because I think cash is going to be king in the next 6 to 8 weeks. Okay, that's my thinking. All right, so I've done that, do the VIX, do this. Okay, a couple of questions I had. Could I just quickly go through my cash index? That's Cintas, CTAS, trading down just over $1, 255, 277 was the all-time high in October. This is not good action. It's telling me that somewhere within the overall market, within the overall economy, there's a sector that's dealing with overalls and uniforms and rentals, and it's having a little bit of a little difficulty right now. That's what Cintas is telling me. Not that there's a recession, that it started off as something somewhere. It's not in Marriott, it's not in the hotel area, because Marriott's almost at its all-time high. So it's somewhere in this overall sector, overall in the overalls. Next thing we're looking at here is Cintas. Cash is Amazon. Amazon, this should be the best time for Amazon, and it's failing. 2050 was the all-time high, 2050. And now it's trading at 1755. There's a problem here with Amazon. It's just a real problem. SPY went to an all-time high, 27th. It's kind of fading a little bit to follow through on that high, but it's not fading on the weekly chart. But the daily is saying, hey, I'm struggling. That was just a false move on Friday. I'm struggling. SPY, so that's Cintas, Amazon, SPY, and Home Depot. Home Depot having a good day today, up 3 at 217.20, but way off the all-time high of 239.31, double top, plunging down to the 212s. It's having a problem here. I'll be back. Dow's down, 81, Basil Chapman, Tiger Technicians Hour.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
We're back. So just real quickly, let me mention once more, tomorrow night, MIT, Massachusetts Institute of Technology, is where the meetings are for the Boston Investors Group, and they're on Investors Business Daily, potluck holiday party and talk, Tuesday, December 10th. 2019, 6:30, potluck reception and networking till 7:30, and then seeking investment opportunities for 2020 by Basil Chapman, MIT Building E51, that's the room, and Memorial Drive, Cambridge, Mass. It's relatively easy to get to, and at this time of the year, I think the parking should be good. It explains where to get the parking. So mention that, and don't forget, straight after my show comes Steve Rhodes, Dave White, and Tom O'Brien, and my service here is the opening call daily newsletter. Let me just go through a couple of things. We're still long, the stocks have been long for a little while. We've taken some profits off. We've actually lightened up quite a bit. I'm looking to re-enter some of the positions because they're positions that I think are going to be good for the new year. We'll see what happens there. And the other thing is that the XLF I was asked about, yep, the XLF is trading very nicely. It's at all-time highs here. On Friday, it made an all-time high. Leg E in the XL, 30.33 was the January 2018 high. And this is leg E in the daily chart, only a leg C in the weekly chart. That's interesting. So this I like. 30.46 was the high, and 30.33 was the high before in January. And we've seen how many times have I shown you stocks that have made multi-month V-shaped recoveries from major declines and gone right to the price within pennies, and then had another bit of a pullback. So I'm looking to see, does the XLF pull back because yields go lower as the TLT goes higher because the stock market is under pressure? I don't know. We'll talk about that because there are certain levels that I'm watching. You break above that or below it, and that gives you much greater clues. This XLF is part of the clue picture. So is the VIX index. Have a wonderful day. Check out my opening call, and I will be back tomorrow. Stay tuned for Steve, Dave, and Tom. Have a great day.